Hello everyone, this is Jem from Data Finance. Welcome back to our channel. Today is 24th of December, Christmas Day. Alright, on today we are closing the market. Actually, the market is closed last night. I just want to give an update on what to expect from next week and then how we had this week. Alright, we had a lot of volatility in this week. Omicron related fear, then easing of this fear with less hospitalization, and we have seen natural gas demand is not happening that fast, and then decline in prices, and these kind of things has been seen in the market. All right, we will just go ahead. We will just go ahead with our charts, and then we will just talk about them. The classic closing the video, dollar index, gold, and US oil will be our charts, and then we are starting with dollar index. Dollar index is just easing. Everybody is just, me as well, expecting high levels of dollar index because of interest rates rise in March probably, and with that expectation, dollar index has risen. But then with high numbers of COVID, we have seen decline in dollar index, and right now, as you can see, it's not going further down, and there is a channel actually right now, and if we just stay in this channel, probably in the coming weeks we will see higher levels. But the most important thing is Christmas gathering. Christmas gathering is the most important reason. If people gather more and more, and if the spread of these virus, this variant, Omicron variant, is the mainstream of COVID in US, and we will see a lot of new cases, and it may react in the market, and then it may affect dollar index as well. That's important, because if recovery of this pandemic goes on in US, we will see tapering so fast, and then we won't see any stimulus packages, any easing in monetary policy, and we will see tight dollar market, and then these will push dollar index to higher levels. But if this doesn't happen, if we don't see any tightening in monetary policy, if we just see more easing because of these pandemic-related circumstances, then we will see lower levels in dollar index, and then that will affect all the prices like gold, silver, US oil, euro dollar, GBP USD, USD Japanese yen, and many more will be affected with these price change, the index change. All right, let's look at gold. What's happening there?
You are ready to win with us. GAN Markets.
All right, gold prices. Reason is mainly COVID and inflation expectation. US oil prices were easing, but then on the last 2-3 days we have seen an increase in US oil prices. If oil prices goes at this level, the bottlenecks in US is not solving as well, we won't see any slowdown in US inflation. That is the main thing pushing gold higher and higher. Dollar index is just going down, and this is affecting gold prices. If we just see the reverse, and dollar index rise and gold will be down, and also we will see lower level of US oil. That's all related to each other, and we have to see reverse of dollar index to see lower levels of gold. At this level, as you can see here, it is testing so much 1800 levels, and that's the critical support line. As we see these levels, we are expecting high levels, but Not that much, because it doesn't give that signal. As you can see here, when it just goes up and then when it just tests a higher level of 1800, then another rejection from these levels at 1810 levels is just happening, and then we see another trial to downward. This is important. This is really not good for gold investors, because it's already a loss year for gold investors. And if they haven't traded in this volatility, and if dollar index goes higher in 2022, which is expected, then we will see another major drop in gold prices. But the key factor is dollar index, and also there are some risks, as you may know, like Russia and Ukraine risk, and like a conflict risk, and also a cultural risk. If these risks pile up, if you just see more risk like this, gold will go higher and then will test 1832. But if you don't see those problems, if you just resolution in these problems, then we will see lower levels, and many people. All right, our last chart is US oil. US oil is rising from 67 level to 73. It's $6 increase in just 2 days. That's really good rebound in US oil prices. Dollar index is helping to these rise. If you just rebound, another rebound in dollar index, then we will see a rejection from this level. And as you can see on RSI as well, it's on right now overbought position, and each time when we reach this level, we have seen another decline. So it's in a really good sell position. As long as we don't see any production cut from OPEC members, we will see lower levels, because Biden administration and consuming countries are really after lower prices. We will see that one. A slowdown in China is also possible in coming months. This will affect the oil prices as well. Related to the real estate sector, we can see slowdown in global economies, and these may affect oil prices. Thank you so much for watching. Have a nice weekend. Have a nice Christmas. Bye.